Hello and welcome to our second crypto bear market podcast. Today we're going to be discussing the recent price action happening in the financial and crypto markets and potentially some insight and tips on how to get through a bear market. On the call you have two early crypto investors who have been through many bear markets themselves, and hopefully we can share some good advice. It's important to note that this is not financial advice and is just simply insights and tips that we've learned from our crypto experience, and please do your own research when it comes to your own crypto portfolio. Anyway, first question over to Joe. What are you doing with your crypto portfolio? At a macro level, are you buying, are you holding, or are you selling?
So first off, it's great to be on again, discussing crypto as we all know and love. But to answer your question, what am I currently doing? I'm currently holding on tight and watching the markets really, really closely. Because my crypto portfolio is a little bit established, I'm always in a position where I'm trying to diversify out of crypto a little bit to make sure my portfolio is nice and balanced and to weather any storms. How about yourself? What are you doing with your crypto portfolio currently?
Yeah, I am. I'm holding, and I'm holding because I am a long-term believer in crypto and very specifically Bitcoin and Ethereum. So rather than try and sell at the top and buy at the bottom, I am primarily holding on to my portfolio, and I'm also using this as a good time to accumulate cheap Bitcoin.
Yeah,
So
I
for
think, sorry, carry on.
I was going to say, for reference, Bitcoin is 65% down from its all-time high and 36% down year to date. Ethereum is down 59% from its all-time high and 47% year to date. So undoubtedly, that is a lot of volatility for regular financial markets. For crypto, we've seen worse bear markets. So my belief is unchanged, and I'm seeing this as a time to hold on tightly, be patient, and I'm personally trying to accumulate a bit more coins than I would otherwise.
Yeah, it's worth sharing. The usual tips always apply. So during these markets, those people who have been kind of buying a price average to dollar cost average into the markets, they're of course celebrating right now because the same amount of money will buy them more of their favorite tokens. For those who have been long-term holders, possibly it's a good time to consolidate some of your portfolio. I know we're going to touch on that a bit later, so I'm excited to talk about that and what I'm doing personally. And sellers, oh, I feel they're paying a little bit. It's not a great time to sell if you need that money, but do consider, which we'll talk about later, that perhaps your portfolio is not quite structured so well if you're looking to sell right now. Perhaps you could have acknowledged that crypto was a little bit higher risk, and perhaps you could have allocated less of your portfolio's value to crypto if you need to sell right now.
Yeah, it's a tough situation, and unfortunately, newcomers often have the toughest bear markets because typically adoption goes up when the prices are booming. So when the prices are high, you generally have more people entering crypto for the first time, and it's a real tricky situation because when you get into crypto, you're very excited to make your first purchase, even if it is expensive. You're excited to make your first purchase, and you haven't necessarily learned about dollar cost averaging, and you feel fear of missing out, so you're not patient. And yeah, it's a tricky situation because the best way to survive a bear market is to be investing conservatively in the bull market, which unfortunately we're gonna have to wait a little while for that. But I will share my screen to just explain why I am holding on and accumulating cheap Bitcoin where I can. So to start off with, we are looking at Bitcoin on a log scale with weekly candlesticks. And as you can see, generally we have gone up and down a few times through different market cycles, but the direction is pretty clear that we have long-term growth. And I think a worry that is on people's minds is in the previous the previous bear markets, we've seen 85% pullbacks from the all-time high. So in 2014 to 2015, we had a 85% decline, similar decline before. And if we were to also have that 85% decline, that would mean we would finish around 10K or 9K, which is still a very large drop all the way from 30K. However, I do have reasons for optimism. And the reason for my optimism is I like to use moving averages to see whether Bitcoin is relatively cheap or expensive. And if we layer on the 100-week moving average to start with, we can see that Bitcoin has recently become cheaper than its 100-week moving average. So the 100-week moving average is currently 37K and we're at 30K. So there's a bit of a discount there. And historically, it has been a good time to buy Bitcoin when the price is below these levels. You could say that any time has been a good time to buy if you held long enough, but when the price is in these areas over here, it's been a particularly good time to buy. I think the next question on people's minds is often, well, how low can we go? As I said earlier, I'm optimistic we won't be going as low as 9K. Not financial advice, that's just my opinion. And what I'm instead watching is the 200-week moving average. And I prefer this as a reference point for how low we could go, because this is a moving target. In the past, we have seen 85% drawdowns, but that's only because the bull market was so explosive. What goes up often comes down, and we simply haven't had a bull market as explosive as before. So typically, we've seen a 100x movements, and in the from COVID crash to market peak, that was a 20x movement. So I don't think we necessarily need a extreme bear market, and instead, historically, Bitcoin has often bottomed out around the 200-week moving average. So currently, the 200-week moving average is at 22K, and I think that's a more realistic reference point for where the bear market could possibly end. So my overall consensus is that there is scope for this bear market to get worse, but I have a long-term view that now is a cheaper time to be accumulating crypto. So I'm holding and buying with dollar cost averaging.
Perfect. Thanks for sharing that. I think it's really insightful to share with the audience that, while some people love to do technical analysis, which is what the kind of chart reading was, I kind of, in contrast to you, but also in support of the different methods that there are out there, take a more fundamental approach. So what that means is I take a look at the market and my knowledge of economics as a whole. I try to educate myself as to what's happening with Bitcoin in terms of its global adoption. I like to look at things like, what the regulators are saying about Bitcoin at the minute and what the banks are doing with Bitcoin at the minute. So in my kind of past experiences working in banking and finance, I know that, this is a bit of a force to be reckoned with that isn't necessarily reflected on charts. And so, if you supplement a little bit of your knowledge with a little bit of chart reading, it can, supercharge, your level of confidence when it comes to what's the right price or level to invest in. So one of the main principles that I like to share with other people is that I tend to use my kind of fundamental view and say to myself, look, in my own portfolio, in the things that I like to hold, what's the much bigger picture? And if we talk about bigger picture, we're not just talking about, what's going to give a return in 6 months' time, what's going to give a return in 12 months' time, as is becoming painfully obvious with some of the audience right there. They're coming to us and sharing with us, look, the markets are down and feeling the pain. You can kind of tell their investment horizon perhaps was a little bit short. What I tend to say to people is, I try not to hold anything which I'm not willing to hold for at least, say, 5 or even 10 years, period. So that becomes a very, very different question at that point. In my opinion, do I think a technology like Bitcoin is going to be adopted more in 5 years' time or 10 years' time, or is it going to be used less? And in my experience and what I know out there from regulators looking into it, from banks looking to invest into it, my 5-year time horizon, if I was to kind of hazard a guess in my own experience, is generally very, very bullish. I think in the long term, that whatever the price is doing within this short period, it's going to be low compared to if Bitcoin is adopted in a wider scale in the banking and traditional banking and finance industry. And with that view, I think whatever price we see during this period, it's going to be cheap in retrospect when you're looking back. And yeah, your charts tended to have reflected that picture as well. If you invested in Bitcoin 5 or 10 years ago, you're most likely going to be up, and the price action, the down, say 30 to 40% this year, is not really going to affect you because you would have bought in a long time ago with that view of holding for a very long period. And that's one way of, psychologically weathering those storms. You're not going to be so sad or sentimental about these small short-term drops if your vision is for a much bigger picture, where the world depends and uses technology like Bitcoin a lot more.
Yeah, I agree on weathering the storm, and a factor that could help psychologically is the longest anyone had to wait to make a profit on their Bitcoin investment is 3 years and 4 months, and that happened to anyone who got into Bitcoin in December 2013. That was the peak of that bull market and the start of quite a long bear market, and you had to wait 3 years and 4 months to make a positive return on investment. And to date, that has been the longest wait in Bitcoin. So if you can invest it with, say, a 4-year horizon, that gives you half a year of margin of safety. You kind of should be expecting to make returns in that amount of time. Whereas if you're hoping to make a return in less than 1 year, your chances are lower. So 4-year time horizon is a good mindset to have, I think, at a minimum, really.
It sounds like you speak of that advice from personal experience almost.
Yeah, I mean, that's so I was learning about Bitcoin in autumn 2013, and it was like a bit complicated back then to try and figure out how to buy my first. And by the time I got round to it, it was March 2014, so a little bit after December 2013. So March, my first Bitcoin was like $800, which was the price in March 2014. So I was quite close to that very long waiting time. And yeah, it was really, really tough, extremely tough. But yeah, we're both quite clearly holders of our portfolio, and I'm really interested to hear what specifically are you holding. How does your crypto portfolio look right now?
So what I generally advocate for and what I generally do in my own portfolio is I first off will share that I am a very high risk investor. I'm not too afraid of taking risks in my own portfolio, but specifically speaking about my cryptocurrency portfolio, I like to try and hold at least 50% of my entire cryptocurrency portfolio in either Bitcoin or Ethereum. And that's advice that I'd share with newcomers to the space. At first, if you're looking to play with cryptocurrency, perhaps you would just want to play with some low value coins just to learn how wallets work. Dogecoin is a great one to get started with. But beyond that, if you're looking to invest serious amounts of wealth into it, don't put it in Dogecoin. Use it as a test bed to learn from because it's very cheap to transact. Beyond that, I would encourage people to, if they really don't know, just allocate, say, 50% of the money that they're allocating to crypto into Bitcoin and 50% into Ethereum. Then you can learn about the merits of either, and perhaps you're more bullish on Ethereum's future. So therefore, I'd tell that person, perhaps you should consider holding 70% in Ethereum and 30% in Bitcoin. Personally, my numbers would look out of my Bitcoin and Ethereum breakdown. I would say I hold about a good 80 to 85% in Ethereum, 15% in Bitcoin. As a part of a wider portfolio, as I shared, only half of my cryptocurrency is in those two assets. The other half is in slightly higher risk tokens. So I would like to kind of promote or advocate for people to look for kind of utility tokens. So what tokens or projects genuinely have some sort of merit from, say, a computer science perspective, what helps build the cryptocurrency ecosystem. And there's various levels of kind of technicalities you can drill down to kind of explore what that's going to be. So say, for example, one of the projects I like is Matic. It's what's known as a layer 2 solution built on top of Ethereum. Again, staying true to my belief in Ethereum and its use cases. And Matic as a project, or Polygon as it's been rebranded, helps increase the transaction throughput of the Ethereum network. So one of the challenges as of the last 2 or 3 years, as cryptocurrency has gone more mainstream, is that the cost of transacting has gone up. So there is genuine utility and necessity for upgrades to the Ethereum network to happen. And one of those upgrades is to increase its transaction throughput, thus lowering its transaction price. And yeah, that project is Polygon's Matic, or that's one of the leading projects that's working on helping those technical challenges. Another one is a price oracle. So yeah, there are various price oracles out there, but I'd say that they're worth looking into as well. Price oracle basically means anything that helps the cryptocurrency space connects to data from the real world. So again, I see a very strong use case for price oracles to exist. The leading one that I like at the minute is called Chainlink. So what it does is it takes, say, price data from exchanges and it brings it right into the Ethereum network. And a lot of transacting happens on the Ethereum network using financial data. So this again is an important part of cryptocurrency infrastructure that fits my investment thesis. Beyond that, there is an allocation for NFTs. So perhaps we'll touch on that a little bit later. But yeah, what does your portfolio look like? I'd love to hear what your percentages are.
Yeah, I think my percentages are very different from yours. So I was just trying to break down your percentages. So you're 50-50 in terms of altcoins on one side and then Bitcoin and Ethereum on the other side. And
Yeah.
if my maths is right, that would work out to be 43% Ethereum, 7% Bitcoin, and then 50% altcoins.
Yeah, correct.
Okay. Yeah, it's very different to mine. So I am 99% Bitcoin and 1% Ethereum. And
wow, interesting.
yeah, so that is on the basis that, so I'll start off with the altcoins, which in my eyes is a more obvious decision. So I am a less I have less risk appetite than you. So I have 0 altcoins in my portfolio at the moment, and I think the numbers kind of speak for themselves. It may depend on how long you want to hold these altcoins for and when you first bought in. But Cardano is down 82% from its all-time high, 62% year to date. Solana is 80% down from its all-time high, 70% year to date, and Dogecoin is 88% down from its all-time high and 49% year to date. So for reference, those are all doing much worse than Bitcoin and Ethereum. And I'm glad that what little I did have of those coins, I traded for Bitcoin quite a while ago. And the reason why I did that is I could see, incoming bear market. And in previous bear markets, a lot of altcoins have died out. So we may be familiar with things like Feathercoin and Peercoin, Blackcoin, Mastercoin. Those are all altcoins that were in favor during, say, 2014, and now they don't exist anymore. They may have a very, very small market cap, but I know a few of those actually do not exist at all. So if you invested in those, you have 0 money left. So that's the reason why I don't have altcoins, is because typically many of them have not survived bear markets. So even if you want to hold on for 10 years, you're holding on to something for 10 years that doesn't exist. So you can't hold your way out of every bear market, unfortunately. And in terms of Bitcoin versus Ethereum, it's probably the most difficult decision anyone has to make with their crypto portfolio. And you it's a difficult decision because you are kind of forced to make that decision as well, right? Because I think a portfolio without Bitcoin or Ethereum is madness. So you're forced to make a decision on Bitcoin versus Ethereum, and there's good arguments for and against. And I personally have sold my Ethereum for Bitcoin because Ethereum in the past bear market did much worse than Bitcoin, and I feel like it still has potential to underperform again. At the moment, Bitcoin has done worse than Ethereum in the bear market. So Bitcoin is down 65% from its all-time high. Ethereum is down 59% from its all-time high. So I feel like Ethereum has scope to fall further. And I'm going to share another chart just to illustrate what I am watching. So here we have the Ethereum and Bitcoin exchange rate, and this is one of the most volatile cryptocurrency pairings and extremely hard to predict. I've studied this, and there isn't really much going on to give you any indication of where it could go next. I think we can make some macro observations that, firstly, Ethereum is gaining on Bitcoin. So if this chart goes up, that means Ethereum is becoming more valuable compared to Bitcoin. And during the previous bear market, Ethereum became less valuable compared to Bitcoin. And what I am watching to try and make a bit more sense of this is the 1 year moving average, 50-week moving average to be more precise. And that's the blue line. And similar to the Bitcoin chart, in these areas below the 100-week moving average, it has typically been a cheap time to buy Ethereum with your Bitcoin. However, it also has marked the start of larger declines when we've crossed over that line. So although it's generally cheap in this area, what we've seen in the previous bear market is we cross over this and we spend a long time going down. And we've only just recently crossed over this moving average. And yeah, you could say it's potentially a cheap time to buy, but dangerous price movements have happened after this. So we've gone from 0.016 down to 0.007. These are big drawdowns, and in my eyes, Ethereum really hasn't had as big of a drawdown as I would expect in this bear market so far. So in my mind, what I am thinking is going to happen for this summer is Ethereum to either be flat against Bitcoin or go down against Bitcoin. What I'm personally not expecting is for Ethereum to go up. I think really Ethereum should have gone down further than it already has this bear market. And I don't normally do short-term trades like this, but I think that for this summer, I don't see a lot of evidence for Ethereum outperforming Bitcoin. So by selling my Ethereum for Bitcoin, I'm expecting to either break even or maybe make a slight profit on that trade. And the reason why this is potentially one of the more shorter term trades I do is because of the upcoming merge. And that's expected to happen in Q3. And that's going to be when Ethereum switches over from being proof of work to proof of stake. So that should help with scalability and the environmental impact Ethereum has. So if that goes successful, that should be really bullish for Ethereum. And during that time, Q3, I'm kind of expecting the worst of the bear market to be over. So I am looking for opportunities to start buying Ethereum with my Bitcoin, but I don't see a lot of evidence of why I should be holding more Ethereum than Bitcoin right now. And that's given Ethereum's past performance in bear markets and the fact that I think Ethereum should have dropped further than it already has so far this year.
Yeah, I think it's worth touching on the history of Bitcoin itself, actually, because I think that informs a lot of important decisions that maybe you're making. So, we've been in a space for a little while and we've seen the space grow from literally Bitcoin with one exchange to a number of exchanges, adding Bitcoin to fiat trading pairs, to Ethereum suddenly existing. And now Bitcoin and Ethereum, as we're talking about it now, uh, exists, but it hasn't always been that case. And it's also worth noting that, when Bitcoin was introduced, the only way to onboard into cryptocurrency was to use your fiat money, your US dollars, your British pounds, um, to buy into Bitcoin. And then when the altcoins came, when Ethereum came, the only way to get Ethereum was to first buy Bitcoin and then use that Bitcoin to buy Ethereum. And so historically, and not just that, but on top of that, um, you know, the major use cases for especially the Bitcoin maximalists out there is that Bitcoin is seen as and generally used as the gold standard of the cryptocurrency space. For the longest time, it was the most liquid cryptocurrency, and I still believe it does hold somewhat of a crown in terms of it's the currency which is traded to and from when people are onboarding into the space. Not sure about the most recent stats as to whether people onboard straight into Ethereum, but I'd certainly say there's a strong use case to hold Bitcoin over Ethereum. Also worth noting that generally, if you look at cryptocurrency as a whole, if we back out again, Bitcoin and Ethereum generally tend to follow each other as a bigger picture. So the gains that you're chasing, are the smaller percentage differences when you're considering a whole portfolio view. But something that I'd like to fast forward to this middle of 2021, there was a code change release called EIP 1559. And that made, so I have a slightly different view to you. I think Ethereum is going to grow strong, but let me quantify that statement. Let me justify it. So we know what an inflationary coin is. So that basically means it's a currency or a coin that you get more minted all the time. With this change, kind of in anticipation for the Ethereum to transition to proof of stake, or what people used to call Ethereum 2.0, as part of this big upgrade. This smaller upgrade, which took place middle of last year, made Ethereum essentially deflationary, or it gave the possibility for Ethereum to become deflationary. And when you stop minting new supply of Ethereum, that's kind of a really telling sign that, much like Bitcoin has its hard cap, Ethereum may start to increase in price because its supply is becoming a lot more limited. If it's inflationary now, it's a lot less inflationary than it was. So I think that's a key metric that from a more macroeconomic perspective, from a fundamentals perspective, I'm certainly considering in terms of my view of holding Ethereum.
Yeah, I thought for a second you were going to reference the Bitcoin halving, and we're seeing with Bitcoin halvings that what the Bitcoin halving is the Bitcoin halving is a moment where the Bitcoin code changes to reduce the mining reward for Bitcoin by 50%. And that effectively works out to be 50% less supply of Bitcoin hitting the markets from miner. And when you have less supply and equal demand, price goes up. And as you just described, Ethereum is now deflationary. So that means that more Bitcoin is burned than is created. So again, the similarities to the Bitcoin halving, where you've got supply decreasing, demand in theory remaining constant, and basic economics tells us that the price should go up. So yeah, it's very interesting times for Ethereum, because you could, on the one hand, you can look at what's happened in past bear markets and pretty worrying data. On the other hand, you can look at what's actually happening with Bitcoin and with Ethereum's code and promising developments in general, really. So yeah, it like I said earlier, it's probably one of the toughest decisions to make, and I think Ethereum generally well, Ethereum has outperformed Bitcoin since it's existed. The thing that could worry people and worries me is Ethereum has done worse in the bear market. So I think I still kind of I'm happy with my decision to be pretty light on Ethereum at the moment, and I'm looking to accumulate Ethereum as well, right? It's not going to be low Ethereum forever.
Perfect. Well, we look forward to seeing what happens with these portfolios in the coming years.
Yeah, we'll have to keep tracking.
Yeah.
Next topic is how will NFTs perform during the bear market? And this is really interesting because it's going to be the first crypto bear market for NFTs. And to recap what's happened so far, we can use Bored Ape Yacht Club as a reference. So the floor price for Bored Apes is down 36% from their all-time high, but that was driven by people purchasing Bored Apes to qualify for the ape token airdrop. And Bored Apes are actually up 45% year to date. And it's quite interesting to see that Bored Apes are up 45% year to date, and Ethereum is down 47% year to date. So Bored Apes, and I've seen this with other NFTs as well, are actually holding quite steady in dollar terms, which we can talk about a bit more in a second. The other stats I'm watching is OpenSea trading volume. So the trading volume in April was $3.4 billion, which again is in line with other months in 2022, and pretty much in line with the average since of summer 2021. And then finally, number of OpenSea traders was 2 million in April. And again, this is in line with the months we've seen in 2022, and it's trending upwards. So far, NFTs are doing pretty well in the bear market. What are your thoughts?
Yeah, really excited to be touching on NFTs actually, because I've been really deep into this world all of last year and even this year as well. Where to start really? So NFTs pretty much went mainstream when COVID kicked off, and it's just been a crazy mess of media coverage for all sorts of NFT projects throughout the year. Most of the crypto news that's come out last year was all NFT related actually, and a lot of the big success stories in the cryptocurrency industry have also come out of NFTs. Now that doesn't come without its warnings. Now we're in 2022, and a lot of projects I'm seeing out there are what I would consider or what I would call money grabs, actually, which is a little bit unfortunate. But where you see a lot of people making money through an industry like NFTs, of course, the talent's going to follow. And if anybody can make a digital JPEG and sell it for a lot of money, of course, a lot of people are going to try that. So my investment ethos for when it comes to NFTs is to try to buy the ones that are more established if you're buying it for investment value, or have a legitimate reason why you want to buy it. Say there's an artist who you really enjoy the art of, there's an artist who you want to support. That artist just so happens to have just released some NFTs. It's a great way to support the artist. And at the meantime, you get the joy and the satisfaction in knowing that there essentially is no middleman. You're buying the art directly from the artist without them having to pay their 40% cut to a gallery, which I'm told is honestly that much. It's pretty unbelievable for me. Or without having to pay auction fees on Christie's or Sotheby's, which I've been told can be equally as expensive. We're talking in a cryptocurrency space, an average fee of less than 2%, which it really is incredible actually to be part of this world where your legitimate financial support for somebody who you're a big fan of actually gets directly to that person. And never before have we seen a world where the fan base has been so able to connect with the artist who's releasing the work of art as well. And what precedes this was social media becoming the norm now. So again, before, where an artist used to have to partner with a gallery to display their artworks to a lot of people, now an artist can post a picture online. If it goes viral, they can choose whether or not they want to sell it as an NFT. So not only have they got a direct relationship with their fan base, they've got a direct channel to be able to sell directly to that fan base, which for me is a really, really exciting use case. Now, one thing that we touched on earlier was my portfolio allocation, and what I did not share yet was my NFT allocation. So Josh, hold on to your seat. You may be shocked to hear that. Roughly about 5 to 10% of my portfolio is in NFTs, actually, which I would consider a very high amount. Again, I wouldn't recommend people do this because, again, I generally wouldn't recommend people to lean upon the NFT industry as an investment because they're highly speculative. The technology is still very new. But if you did have that risk appetite, you did want to be an early adopter, then there are a couple of key things you should look out for. So one thing that I like to share with people is I like to focus a lot of my efforts on, or investment efforts into buying what I call blue chip NFTs. Now, blue chip NFTs are NFTs that really did kind of move the needle in terms of they were the first in the world of their type. Who are the groundbreakers? Who are the innovators? And Bored Apes, CryptoPunks were also one of them. So CryptoPunks were the first project to really, come up with the idea of 10,000 drop. They were one of the first ERC 721 tokens, the NFT standards that became very popularized, and as a result, it pretty much marks a moment in history that you can essentially in digital history, which you can own, which for me is a really exciting prospect. Bored Apes is very, very similar, now owned by the same team. They were one of the first really customized personal profile picture NFTs. So there's become a cult following because of the strong community. And part of the reason why I think it's a good investment is because the community is so strong. The innovation behind Bored Apes was that the owner had essentially a free license to use their Bored Ape image as they liked, and all of a sudden it appeared on billboards, it appeared on beer cans, and the fans love that. And it's become a bit of a status symbol. It's blue chip because it's one of the original projects. The people behind the project keep on actively pushing it. They keep on encouraging development within a community. They know what they're talking about from a technical perspective, and they're really good at engaging their fans. So they'll do airdrops where the token value is, I'd say, quite significant to the ape holders. They do metaverse land drops as well, and they're one of the efforts behind metaverses, which I will say is worth paying attention to, contrary to a lot of metaverse projects out there. And so, yeah, and what we're seeing nowadays is a lot of people, celebrities on social media, also endorsing the fact that they own these as a bit of a digital flex, if you will. Matters more to some than others. But yeah, the effect is still the same, really. So as we spoke about the economics earlier, they apply to the art industry just as much as they apply to investment. If you've got, say, a limited edition drop of 10,000 Bored Apes, if there's a huge demand to own these Bored Apes and only 10,000 of them, then naturally what's going to happen over time? The price is going to go up, and that's what we're seeing.
Very different opinions to you on NFTs, but I do.
Yeah.
Well, hopefully, it's going to make for a good debate. But I do agree with the bull case that you outline, and I think if you believe in NFTs, that's the right mindset, is to go for established blue chips, the ones that are building the metaverses, the most interesting projects, rather than the ones that are just trying to make a quick buck by flipping JPEGs. So I am holding a couple of NFTs. I'm holding say maybe 4. One of them is because the liquidity is very low, so I can't sell it if I want to. Which yeah, so I'm forced to hold that one, and then I've got say 3 others that are a low price, and they're doing interesting stuff. So I'm kind of interested to see where that project goes. So one of the ones that I'm kind of optimistic about is a NFT project called Martian Premier League, and they are building a fictional fantasy football game where you can build teams of football players, and they can compete in matches that take place on March. And the reason why I like this project is because this is actually a game I want to play, which I think is a very good litmus test for NFTs. Uh, if I was retired and I didn't need to make any more money, I would still like to play this game. So that has my interest besides any financial motivations, which I think is a good sign for the game. And the floor price at the moment is probably about 0.1 Ethereum last time I checked. So I'm not going to lose any sleep over it. And the reason why I don't hold a lot of NFTs is, firstly, no proven track record. Maybe they completely disappear in this bear market. And secondly, I'm not convinced about the long-term value. I think there may be some projects that survive, but I think that even for the blue chips, the next year or so is going to be the moment of truth for NFTs. If you look at Bored Ape Yacht Club, what they've done so far is release pictures of monkeys and trailers and images of the different land. And that's a very graphic design, creative skill set. And it can be difficult to execute on a project like that. But the second phase of that project is going to be building a metaverse. And that's building a virtual reality world. There needs to be games inside that world. They need to build an economy inside that world where ape token is used to buy and sell different things inside that metaverse. And that's where the real challenge begins. And I think there is a risk that they've been able to deliver on the artwork side of the NFT project. I think there is a risk that they can't deliver on the metaverse side of the project. And I think this is where the hard work really begins. I think it is promising that they've raised a lot of venture capital money, so they can probably just throw money at the problem, hire loads of smart software developers. But I still think there's a high executional risk, and the skill set in managing NFT projects going forward is going to be very different from the skill set that has contributed to their success thus far. So that's kind of my short to medium term view of NFTs and blue chip NFTs as well. And from a longer term perspective, I've debated back and forth in my mind whether NFTs have long term value or not. And from an artwork side of things, I think the argument often comes back to this image could be worth a lot of money because people pay a lot of money for physical artwork. So why won't they pay a lot of money for digital artwork? And what concerns me about that comparison is my intuition is that the physical artwork is heavily inflated from money laundering. So I don't think it's a fair benchmark to use as a valuation for digital artwork. So with that in mind, and knowing the performance of Bitcoin and Ethereum over the long run, I think to myself, why do I want to mess up the opportunity of just holding my coins? For my risk appetite, I'm just comfortable holding Bitcoin and Ethereum. I have very good optimism in those coins, and why do I want to mess up losing any Bitcoin and Ethereum over that? I'm holding, say, an NFT that has a floor price of 0.1 Ethereum. I'm comfortable losing that money right now, but maybe in 20 years' time, when Ethereum is 100K, I would be pretty annoyed to lose 0.1 Ethereum. So I'm very cautious that Bitcoin and Ethereum have scope for exponential growth, and I don't want to miss out on that really with risking it in NFTs.
Yeah, no, that's very prudent advice, actually. So understand your risk appetite, first of all, and have yourself a litmus test, right? So if the NFT project is promising the world, trying to deliver all sorts from games to metaverses, just understand there are very few people in the world who have the ability to create a successful, say, NFT game. And with the amount of promises out there, a lot of them are going to fail, actually. So if the team doesn't come with clout, again, do your own due diligence. Perhaps put an investor hat on and approach it like you are a venture capitalist. and say, look, what are these people trying to promise beyond just artwork? And even if it is artwork, what are their credentials and qualifications? Have they been an artist for the last 10 years and they've just discovered a new medium to express themselves? If so, I think that's a perfect use case, and a use case for which NFTs were, I guess, more intended for, right? But now with the introduction of 10,000 drop pieces, everyone's loading up Photoshop, everyone's creating 10,000 drop personal profile picture NFTs, and everyone's trying to promise the world with them, which in my mind, and in your minds too, should set off warning flags. So yeah, my advice is just be careful. Don't go and invest in NFTs straight off, especially if it's your first exposure to the cryptocurrency space. Consider owning Bitcoin and Ethereum first. Only then, if it's an artist that you really like, you really love, you want to own just for the sake of the art as opposed to for the sake of an investment, then go for it. But again, be careful. Don't perhaps consider putting more than 5% of your crypto portfolio in something like NFTs unless you're comfortable with a huge risk appetite. It's also worth noting that NFTs these days take on many shapes and sizes and formats. You've identified, genuine utility by holding an NFT that just so happens to be a game at the same time. That kind of fundamentally gives it more value, because we know that we live in an age where kids are digital natives, right? They really value their, say, Counter-Strike, their in-game skins and items. So Counter-Strike knife skins are a good example that trade for hundreds, if not thousands of dollars. People buy Minecraft expansion packs with skins. People invest hugely into different online games as well, World of Warcraft and all sorts to have ultra rare items. And we're growing up in a day and age where kids really value these things, and so having those being digitized in a right kind of metaverse will have value, but it's very hard to tell. Nobody can tell the future, so don't believe everyone's promises is the general advice.
Are you worried about the impact that a NFT collapse could have on Ethereum? Because one of the reasons why I hold less Ethereum compared to Bitcoin is I recognize the potential of Ethereum, and I've seen different forms of valuations on Ethereum, and in particular, someone on the Bankless podcast went on to present a discounted cash flow model of Ethereum, and they argued for a valuation of 10K for Ethereum based upon its cash flows generated from fees. And a lot of demand, we see this in the network congestion, a lot of demand for Ethereum is derived from NFTs. So with my train of thought, if I'm more bearish on NFTs, I'm aware that if NFTs were to vanish overnight, that should have a knock-on impact on Ethereum, where there's suddenly less demand for Ethereum. Did you agree with that? Does that worry you?
It I agree with it a tiny bit, but it doesn't worry me because let me explain. So I'm very bullish on Ethereum because I see from a technical perspective, it's a game-changing technology. NFTs I see as a use case, an application of that technology. But just like you wouldn't say value the whole internet on say one website, the value of the derived from the internet from one website. I think the analogy is somewhat true. If NFTs were all of a sudden flawed, they lost their value overnight, it still wouldn't mean that Ethereum network itself automatically doesn't have value. So but it's true what you say actually. So I agree with a bit in terms of transaction volume. We will, if NFTs do collapse, we will see transaction volumes associated with those NFTs drop hugely as well. But there is a self-correcting fee mechanism in most cryptocurrencies, such that the less demand there is to transact, the cheaper the fees. And don't forget that there is a lot more other utility being built on top of the Ethereum network. So decentralized finance is one example. And yeah, I just was familiarizing myself in the last 2 months with a new field called FitFi as well, fitness finance. I'm not sure if you've heard of that, but this is where, say, collectible shoes can be attached, NFT shoes can be attached to a fitness app that can keep track of how many steps you're doing. And yeah, those steps are associated with or living a more fitter lifestyle. Therefore, they come with financial gains and perks as well. Whether this is a Ponzi scheme in the long term, only time will tell. There is a new term that's being coined out there called Ponzinomics, which I am trying to get more and more familiar with, which kind of indicates, a lot of these projects are based off the fact that new investors must come in to support the existing value. Some of the projects we've seen have had those traits, and especially I think we're going to touch on Luna token later. So in hindsight, it's very easy to see a case of the old Ponzinomics here. But by and large, I'd say, as long as we educate as many people as possible about the pitfalls of buying bad NFT projects or, falling for somebody who's just trying to make a quick buck in a space, then I see the NFT space as here to stay, and a new kind of format to art, which we can all enjoy, which is more shareable, easier to own, easier to store than art as of the previous generation. So I'm wildly excited. Even if NFTs take the kind of worst case scenario in my mind, it would still increase the value of the Ethereum network. It would increase and enrich people's experience of the art industry as well. And let's not forget, with the NFT industry kind of shooting up from nowhere, it's gotten a whole new genre of people interested in not just buying art, owning art, but becoming artists themselves. And the whole purpose of this, in my mind, is about the art industry, which Ethereum and NFTs are currently disrupting. And yeah, if I borrow from the wider experience of just my career in technology in general, I know technology tends to move between different sectors and disrupt different sectors at different times. And I was pretty excited to see how the art industry was disrupted by the innovation that is NFTs. So yeah, quite a different picture from you, but it's interesting to share these insights because we never know what we would find.
Yeah. Do you have any thoughts on NFTs price being decoupled from Ethereum? So, like I mentioned earlier, um, uh, Ethereum is down 47% year to date, and Bored Apes are up 45% year to date. So they're holding their value in US dollars. And what I've seen in the past with NFTs is that when the price of Ethereum goes down, typically the NFT market has thrived. And my theory behind that is when the opposite is happening, when Ethereum is going up, people are more cautious to invest in NFTs because if they get it wrong, then they lose more in dollar terms because that Ethereum that they lost is more valuable. And alongside that, we've got Ethereum becoming cheaper. So you could argue that NFT investing is less risky when you're doing it with Ethereum. And alongside that, a lot of exchanges are allowing people to buy NFTs with stable coins or even fiat money. Do you think that potentially NFTs could do okay in this bear market if they become priced in US dollars rather than in Ethereum?
Oh, getting on to the really juicy questions. I like these. Yeah, no, I'm a firm believer in that. Actually, I think the right NFT project acts as a good hedge against the value of cryptocurrencies dropping. Because yeah, I've also noticed this trend in the last year. If you buy the right project, even if the cryptocurrency market is going down, in not only dollar terms but in the cryptocurrency price terms as well, the value of the NFT stays relatively consistent, if not can still continue to go up, as is the case with Bored Apes. But the I guess the advice rings true and rings loud and clear that you must pick the right NFT projects to back, which is very hard to do, but I don't see it as any harder than, say, investing in the traditional art market from what I've learned about that as well. So if you buy a Picasso, regardless of what the economy is doing, a Picasso is still a Picasso. And as long as there are people wealthier that are willing to buy that Picasso, then its value will not just remain what it was last sold at, but be usually sold at a much higher price, even if markets contract. And it's a classic discussion about assets and asset values, right? So if you have a desirable asset, um, that if you have a desirable asset that many people want to own, then it generally shouldn't matter too much, especially at the upper end of the market. When you're going to sell it, you should, as long as you've held the piece for a while, should be able to cash out for a reasonable value. Now, I was having an interesting discussion with this with someone recently about one of the use cases for the luxury goods market, and that use case was Rolex watches. And one of the classic things that people love to say is uh, the reason why the wealthy love to buy assets such as these watches, as we've seen go up in price during the pandemic, actually, is that even during wartime, people used to buy them for mementos for each other, because even if they were um, say held hostage or in a really tricky situation in another country, they could still sell that Rolex watch for, if not the same amount of money that they bought it for even more money, actually. So that's a really interesting proposal. Have you ever thought of applying those kind of principles to NFTs?
I I I get the logic behind buying Rolexes and luxury goods, and I think there's a I noticed a really interesting dynamic recently, and that's if you have the money to buy expensive gifts, it actually works out as advantageous because a lot of watches and um, handbags do maintain and hold their value, whereas a lot of cheaper watches and cheaper handbags, for example, are worth less immediately when they're pre-owned. Whereas in the upper end of the market, items that are hard to get hold of, they do actually hold their value or increase in value. So if you are going to be buying a watch or a handbag, if you have the cash flow, it kind of does make sense to splash out because it's not going to hurt your net worth. Whereas when you do buy a cheaper item, your net worth does actually decrease when you have that item. And on 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 NFTs again, I'm just I when I have been more invested in NFTs, I didn't like the amount of price watching I was doing, and um, I agree with the sentiment of sticking to blue chip projects. But the trouble with that, I find, is that the entry price can be quite high, and um, with the entry price being higher for those blue chips, I'm just not comfortable putting that money in, and it's completely against my investment style to be watching prices regularly. I know I've referred to charts today, but in in my mind, with my crypto portfolio, I think that Bitcoin and Ethereum should be vastly more valued than what they are today. So I don't care if the price is 20k or 30k. They're both undervalued in my eyes. So
Yeah.
again, I'm just I'm not happy to mess up my crypto portfolio by potentially losing any money on NFTs.
It's
And
true. Look after your psychology. Don't price watch, because never before have we had a market that's been so liquid for essentially our items. I just looked up the terms of Veblen good. I think NFTs are the 22nd century version of what luxury watches and handbags were in a previous century. So it'll be interesting to see over time if that prediction rings true or not.
yeah,
But we'll definitely have to keep tabs.
and a Veblen good is a good that's more desirable the more expensive it is, right?
Yeah. So again, it's the classic use case of the luxury goods market, whether we be talking about Rolex luxury watches, luxury handbags, hard to get handbags, or even the same applies for hard to get and very expensive NFT projects such as Bored Apes.
Yep. The last area of crypto I want to ask you about is DeFi. So, how do you think DeFi could do during this bear market? And we've it's been a rough few weeks for DeFi with the collapse of Terra and Luna, and as a result of that collapse, the total value locked in DeFi has declined 46%, And from its all-time high, the total value locked in DeFi is down 55%. So the drop has mainly been driven by this collapse of Terra and Luna, and I'm measuring those that total value locked in US dollars, by the way. So I actually expect that the amount of Ethereum and other altcoins locked in DeFi has actually probably gone up in this bear market. But I'm not an expert on DeFi, as you can tell from my 99% crypto, 99% Bitcoin crypto portfolio. I'm quite a conservative and traditional crypto investor. So I'm yet to do any serious DeFi investing myself. But what are your thoughts? I know you're much more active in this space than me.
Yeah, so here comes the remaining allocation of my portfolio, which you didn't ask about, but you've touched on actually. So a lot of it is allocated within the DeFi space. I'm incredibly bullish about DeFi, or what we call decentralized finance, because when I spent time working in finance, I kind of realized that, hey, some of the rails on which finance is built upon, this simple mechanic of loaning, getting interest rate return for, say, a deposit, and paying that loan back, and that loan interest rate going to the depositor is actually quite a simple mechanic to replicate in computer science terms, right? From a mathematical perspective, it's very easy to lay out on an Excel spreadsheet. And so, when this field of DeFi came about, I'm just like, wow, surely programmatically somebody could build this lending mechanic within a decentralized cloud-based platform, which just happens to be Ethereum, an Ethereum smart contract. And they went ahead and did that. And I'm a firm believer that the future of finance is going to be largely reliant on decentralized finance protocols. So as a whole, I think it's worth looking into right now. We're going to be considered all early adopters in the DeFi space if we educate ourselves about the field of DeFi now. And yeah, touching on to Terra and Luna, I think what's clever, one of the clever innovations that came out of DeFi is the idea of a US dollar stable coin. Now, we know the US dollar is the most liquidly traded asset in the world, most liquidly traded currency in the world. As a result, it bodes well to have a cryptocurrency that is, based upon the US dollar, right? So if somebody wants to sell their Bitcoins, they don't necessarily have to sell it for cash in an exchange. They can just convert it to the US dollar stable coin. And if the markets have crashed, that would have been a great trade for them. They can use that stable coin to rebuy Bitcoin at a lower price. Not that I'm condoning short-term trading, but just as an example, there is great utility in having a stable coin. But I think what we've learned in the last 2 or 3 months is that not all stable coins are equal. Some are built on DeFi rails, and these are called algorithmic stable coins, where usually there is a token that backs the value of the US dollar. And there are your more traditional stable coins. So Tether is one example. So where there's, say $100 of fiat US dollar currency deposited in a bank, the Tether team would mint 100 USDTs, Tether tokens, and that value would be pegged 1-to-1 because each one digital US dollar is backed by one real dollar. Now, where there is a risk introduced is, as in the case of Tether, is where people don't trust that audit process. What if somebody siphoned off a little bit of money here? What if they've minted more tokens than actually exists? So that, then people start to realize, think to themselves, is this a fractional reserve system at that point? Can I trust this singular point of failure, which is this audit or this team that's in charge of the Tether project? There is more trustworthy ones. So in that category, would generally be talking USDC, which is the Circle/Goldman Sachs backed stablecoin. It's trusted more, I personally think, by virtue of association. They're very big names in banking, they're very big names in technology, so they're bound to do it perhaps more right and more transparently than Tether. The jury's out there. And out of the algorithmic stable coins, where cryptocurrency is used to back the value of a digital US dollar, they're subject to risks as well. So mathematically modeling dictates that, cryptocurrency prices can go up and down, but in Tether's case, they didn't anticipate that the market would drop so much in Tether coins, such that the value of the Tether coins backing the UST coins would be mismatched. So at that point, instead of $1 worth of Terra token backing or Luna token backing one UST, there wasn't that amount. And if there's 50% of this token left and double that supply in stable coins, that means that stable coin is, instead of selling for $1 for $1, is selling for 50 cents on the dollar, which is where you see the mechanic of the Luna token and UST token crashing, which is unfortunate. The more trustworthy implementation of an algorithmic stablecoin is MakerDAO's DAI project, which dictates that you must hold at least a minimum of 170% worth of Ethereum in US dollar value for every one DAI token or US dollar token that they mint.
Yeah, I've not used any stablecoins myself, but if I was to use a stablecoin, I would use USDC. Like you mentioned, it's backed by more reputable firms, so it's Circle and Coinbase jointly govern and back USDC, and these startups are most likely to comply with any incoming stablecoin regulation that could come out of America. They have, they've got the funding, the connections, and the expertise to comply with that regulation. I think, I don't want to bash Tether too much, but some people, question Tether's reserves and their compliance with regulation. It's created by Bitfinex, which are not on the best of terms with the US government, really. So yeah, I would, if I was to use a stable coin, I would use USDC. And a question I've got for you is, for someone like myself who is, very familiar with Bitcoin and Ethereum, but has not really tried DeFi too much, is now a good time to get into DeFi? Is it something I should avoid during a bear market, or are yields higher because more people are scared? Is now a good time, or should I just be waiting to get involved in DeFi?
So my advice to everyone is it's always a good time to learn about what it is. Is it a good time to invest? That will depend on your own personal risk appetite. If you are comfortable putting a couple of $100 behind a DeFi protocol, I'd say it's money well spent in terms of the lessons you'll learn out of it. So to learn the mechanics of how depositing on DeFi works, to learn the mechanics of how the interest gets paid back to you is really invaluable. So absolutely, I think any time is a good time to learn about DeFi. Are the returns going to be higher? Again, just as the advice for NFTs was invest in the blue chip NFTs, I'd say invest in the well-established DeFi protocols. So if you've got Bitcoin, Ethereum, or some stable token, hopefully not Tether stable token, then look for the right platform. One of the largest out there is called Aave. Log in, see if they allow that deposit on the right network. Try depositing a small amount of Ethereum or your USDC token to it. Understand that you might get the reward token paid back to you in the same token, or perhaps in Ethereum tokens, or perhaps in Polygon tokens, and just kind of have a go at kind of managing the interest rates, monitoring the interest rates, and observing how the interest rates can fluctuate based on borrowing demand. I wouldn't say at the minute that there's a huge increase in borrowing, so the interest rates may not be as good. But ultimately, if you're a long-term holder, the great use case that everybody's excited about is the fact that, say, if I've committed to holding Ethereum for 5 years, why not stake it on a trusted DeFi platform and get that 1-2% on top of my Ethereum that I'm holding long term anyway. So I think that's certainly worth looking into. And if you can find a platform that you can trust and do your own homework, do your own due diligence, then I'd say it's a good opportunity to try and get more yield from than you otherwise would, especially if the market's going down.
Yeah, it's worth mentioning if you head over to DefiDive.com/DeFi, you can see all of the top liquidity pools and places where you could potentially invest your crypto. So I think that would be a pretty good shortlist to start doing your research from. And I wanted to ask, do you have any beginner friendly DeFi recommendations? Because when I last tried DeFi, I wanted to just dip my toes in the water and see how it works. And naturally, I decided to put some of my Ethereum into a liquidity pool. And I think this was um, a 50, I think this was a freeway liquidity pool, if I'm getting my terminology right, where I put in Ethereum and half of that was converted into uh, Bitcoin, and the currencies it was being traded against was the US dollar. And anyway, I went ahead and I tried this out, and my returns were not high enough to cover the fees I paid. And I could potentially just put more money into it. But the whole point of that exercise was to just try it out with a small amount of money. So going forward, is my solution to jump into DeFi more and stake more Ethereum to justify the fees, or should I be looking at a layer two? And if so, do you have any recommendations?
Yeah, no. So my advice would be to people to say if they're looking on the DefiDive DeFi page, my advice would generally be to avoid the staking or the liquidity staking pools, and to use the category drop down to look into the lending DeFi projects. So these interest rates that are returned to you are returned based on a genuine principle that if somebody is borrowing those tokens, they should pay an interest rate in order to have the luxury to do so. But these interest rates and the borrowing that happens is what we call collateralized borrowing, meaning that the person who's borrowing cannot borrow more than they're first depositing, actually. So from that perspective, I would say it's on the safer side of exploring DeFi. So one of the top platforms, as I can see on the DefiDive list right now, is Aave. The second to that on the lending category is Compound. So I'd certainly say if you load up those platforms, have a browse, learn about them, then you can learn about different protocols they support. So as you identified, it's not just the Ethereum protocol that you can use these platforms on. You might consider using Aave on the Polygon protocol, which means your transaction costs are a lot cheaper. And also you might notice that the interest rates returned are a lot higher. So my first port of call, if the person's technically confident at using MetaMask and using different exchanges, is to first of all go to a bridge and say for example, you've got some USDC, bridge your USDC from the Ethereum network over to the Polygon network, and then load up Aave, and then you can explore depositing that USDC on Aave there for usually it's Polygon tokens in return.
Okay, thank you. I will definitely check that out. And we can go on to our last topic, which is, what is your most contrarian crypto opinion?
Oh, so this dives right into the heart of what we discussed, actually. So there's two things I'd like to share that are quite contrarian. And as much as I'm a fan of NFTs, I will also support one of your opinions that you shared earlier and say that a lot of NFT projects that are popping up in 2022 are, in my opinion, worthless. A little bit controversial, but let me quantify that statement. All I see nowadays in 2022 is not as much innovation in the NFT space and a lot of money grabs, which raises red flags to me. Equally, there is another field in the cryptocurrency space, which we'll probably talk about in another episode, called DAOs. This stands for decentralized autonomous organizations. So they're a way of token holders essentially being able to vote on how a company or project is run. So they're a pretty new innovation. everybody who's working within the cryptocurrency space and all the Ethereum conferences are incredibly excited about the potential of DAOs. But I would also share a controversial opinion that a lot of them are not worth investing in. So be careful, stay up to date, perhaps listen out for our next podcast episode on DAOs, and we'll share some tips in that one. How about yourself?
Yeah, good statements. I think yeah, I like the opinion on DAOs, and I think it almost comes down to the quality of the DAO, because you could kind of say that you're contrarian on businesses, and you've got say Enron, Theranos, terrible businesses, Lehman Brothers, right? And then at the other spectrum, you've got very successful companies like Apple. But yeah, we'll do a deeper dive on DAOs. And my contrarian crypto opinion. This may sound a bit weird because we've just done a podcast about the bear market, and my contrarian opinion is we might not actually be in a bear market. And my justification for that is we could actually be in a sideways market. And I'm just going to share one last chart, because the chart can just illustrate it much better than I could explain. And we've already talked previously that previous bear markets have been drawdowns of 85%. And at the moment, we have a drawdown of 65%. So we do know that this bear market, if it is a bear market, is weaker than previous bear markets. And the reason why I say we might not actually be in a bear market is if you take a 1 year snapshot, we're basically in a sideways market. So in May, we're at 30K. In May 2021, we were also in 30K. So on a year over year basis, we're actually flat. And I think that the price action we've seen this year does remind me somewhat of the price action we saw in late 2018 and early 2019. There's a lot of volatility where we dropped from 8K down to 3K, then back up to 13K. But taking a macro view, I would call this a sideways market. Technically, the bear market did finish here, but as a 1 year snapshot, this time period should be referred to as a sideways market. And again, it kind of looks like a bear market because we're coming down and we previously went up before. But again, if we take that 1 year snapshot, we are basically in a sideways market. And if we were to see a price movement where we suddenly come back up to 50K, then you would absolutely describe this as a choppy sideways market with a lot of volatility. So it probably depends on your definition of what's a bear market and what's a sideways market. But I think I just wanted to share that we talk about bear market as if it is a absolute certainty, and maybe it's not an absolute certainty. On a year over year basis, we're almost flat, and the price can come up. Bitcoin does unexpected things, and right now there's a lot of fear in the market. And there used to be a saying that Bitcoin moves in the direction that will cause the most amount of harm to the most amount of people. And
superstition much.
So maybe everyone's expecting the price to go down further. I'm even expecting it to go down a little bit further. Maybe it's the time where Bitcoin does something unexpected. So there's no guarantees.
Yeah, either way, I'm just super excited to see what happens next. Really, I'm really bullish about Bitcoin and cryptocurrency's future. Really excited to see what happens over the coming years in the space. And if that's any leading indicator, then it's just positive signs from the people working in the space.
Absolutely. I think, as we mentioned in the previous podcast, a lot of the downtrend in crypto is being driven by the wider financial market situation, and that doesn't fairly reflect the fundamental adoption of cryptocurrency. So
absolutely, which is at all-time highs actually. So it's worth leaving on that note.